All right, good morning, Trade Pros. Hope you guys are having a phenomenal start to the day. We got some volatility here in the markets early on. Yesterday was one heck of a day. I'm so proud of the team. Yesterday in our live traders, the people who had live capital on the line, we were able to get 90% of them green, or they got themselves 90% green. So there's a 90% success rate on a day the market's absolutely cratered. So I'm very proud of what we've done here with our team, with our trading room. And another thing to celebrate is this morning, as of last night, it's official. We gotten 2 million views. 2 million views on YouTube. 2 million, 2 million, 2 million, Vicky. Marky, 2 million. If I had $1 for every view. Maybe I do. All right. So, anywho, let's get started with the morning market update. Equities had quite a run down yesterday, and one of the most helpful things I think I could have done for our team is to tell them not to buy this thing. It smelled like a day of disaster. It was very weak, and we just triggered a lot of sell stops. To put it in perspective, we're down 6.3% in 2 days, and we've lost $1.7 trillion of market value in the S&P 500. Right, think about that. In the last 4 days, it's been the worst 4 day slide since December of 2018. You guys remember that right into Christmas Eve. The markets bottomed out. Donald Trump tweeted, "It's time to start buying markets again." And that ended up being the bottom. Donald Trump tried that again yesterday with a tweet saying, "This looks like a great place for the stock market for me," kind of thing. But the CDC warned that the coronavirus is likely to spread across the United States. And, the WHO said that it was a pandemic. The pandemic term was used, and, that freaked out markets and propelled the further downside. Every single market crash, you have to remember, starts as a profit-taking move first. Market doesn't just go to an all-time high and crash down 70%. Everyone panics. Market goes on all-time high, something takes place, and then it convinces people to take some profit. That profit-taking leads to some sell stops, obviously, right? Because people are putting their stops higher and higher to lock in profit and take less risk. And so that triggers a wave of sell stops. That's what's happened here in the last couple of days. The market's been complacently long for a very long time. And so this is a healthy part of market movement. This needed to happen. Now, from here, where do we go? That's the important part, because here's countries that now have infections in them. And remember, it was just China. Our view has been that the markets will hold ground until it stays contained within China. If the coronavirus starts spilling outside of China, the market will proportionally drop to the number of infections, the number of countries it reaches to. China, South Korea, Japan, Italy, France, Spain, Greece, Brazil, all right, all now have confirmed cases. Some of those countries have deaths as well. All right, recently it's taking more of a leap in infection rates in Italy and also in South Korea. South Korea's numbers are increasing steadily, right? On the back of this, Donald Trump's going to hold a press conference today at 6 p.m. Eastern to convince the market that this isn't actually that bad. All right, so keep that on your calendar, 6 p.m. Eastern. And Chuck Schumer is thinking of proposing an $8.5 billion coronavirus relief program, or a plan of how to fight it. Buying materials, buying face masks, all right. He criticized Donald Trump's $2.5 billion number. He said it needs to be higher, 8.5. Saying that acknowledges that you think there's going to be a problem. You can't say you don't think there's going to be a problem when there's $8.5 billion being allocated when you have over $2 trillion of debt. All right, so it's a problem, and I think that anyone who tries to code it any other way, is. I'm optimistic. I'm an optimist eternally. All right, so I'd like to believe it's not, but it is. It's starting to spread. All right, the question here is, what's the impact going to be to the economy? And we don't know that yet. We don't have the answer. When the GDP numbers start dropping, we're going to see. All right, but there are some events that are looking to be canceled. Euro Cup is thinking about it. Summer Olympics could be canceled. French car markets are down 18%, and no one really knows the current damage, let alone assessing the future damage. And so that information has not been priced into the S&P 500 yet. Any new signs of those numbers or tolls or the economic costs will impact the S&P either up or down. So that's unpriced information because no one knows it reliably. Okay. In the markets, though, Japan's down 1%, Hong Kong's down 0.7%, China's down 0.8%, India's down 1%. And in Europe at midday, London's down 0.8%, Paris is down 1.2%, Frankfurt's down 1.6. All right, so sea of red across the board in Asia and in Europe. Europe being hit the hardest. U.S. futures, Dow's up 0.2%, S&P's up 0.3, Nasdaq was up 0.5%. Now back to its previous day closes. We're seeing a little bit of a sell-off, so flat across the board. Huge downside day yesterday, and you have to recognize it and get on board to make some good money. All the traders I know yesterday did fantastic. Talked to a good friend of mine afterwards, and he absolutely crushed it too. So you had to use this volatility as an advantage. But where do we go from here? I think from here today, since we've tested some really long-term support structure, I'm gonna have to look over on this other chart. I think at some point we're due for a little bit of a rebound. But first, the sellers are going to try to make a run to these lows. When we traded down to 30.80 to 30.90 into that range, that's a big support because the low level was around, what was the low? 30.69.5. So we got within 20 points of the low on December 3rd of 2019. So we've effectively erased all of 2020's gains and are now getting into December in the pullback in the equity markets of last year, so a couple months ago. All right, that's going to be a key support level. The 200-day moving average is at 30.50 on the S&P 500. We could chart all the way down into that level, but that releases some sell stops that will get it down to 3,000 even. So, the question today is, will the sellers continue to step on it? I think there's going to be an attempt today to hit some more downside, and if that fails, I think some buy stops are going to come out. If you look at how this chart looks on the S&P 500 on a daily, a lot has happened in the last couple of days. It's been quite a bit of a drop. Markets, what's that? Oh, that's the 100. My bad. The 100-day moving average we broke. The 200 we haven't yet. Yeah. 3165 is the 100. I got a 3050. You have exponential or SMA? I think I do too. That's odd. Let me see. Maybe I have it as a simple one. We have some support below. All right. And so if the sell side comes in today, we could take it a little bit lower, but I really think we're going to get some buy stops today. Why do I think that? We have 4 days of downside. Everyone and their cousins, brothers, uncles, pet is looking to short. And I think when that happens, now it's time to start buying a little bit for a rally upwards. Buying in this kind of market is a little bit of a fade on the short-term momentum. So you got to do it carefully and keep the risk tight and be prepared to shift your bias back to the downside at any moment. All right. In other news, as stock markets go down, bond yields are also correlated to them. So bond yields are supposed to drop lower. Bond yields have been much lower than the stock market for a long time. So now the market's catching down to where the bond yield is. The problem is the bond yield just hit a new all-time low on the 10-year. The 10-year note crashed to 1.31%, all right, compared to 1.377 on Monday. That's a huge deal. That's 60 basis points, 67 that got shaved off that 10-year yield. All right, and it dropped below the 2016 UK referendum vote. All right, and so that's a sign that things are getting a little bearish. Why do bond yields drop? There's a lot of demand for the bonds themselves. Bonds are safe havens. So markets are starting to react, and in the like a medium-term movement, they're starting to move assets off of equities and rolling them into safe haven assets. This is called risk-off mode. All right, we're going to see if risk-off continues today. 10 a.m. we have new home sales, State Street Investor Confidence Index, and then the Department of Energy crude oil inventory report at 10:30. That's exciting, right? We've really been looking a lot at equities the last couple of days. Oil's there as well. The overnight low was at 48.99. All right, oil dropped below the 49 marker, low ticked and then reversed. All right, we have inventory report at 10:30 in the morning. 1 hour of one day, you could make your whole weekly income, and we often do in the trading room. So that's today. 11, we have survey of business uncertainty, results of a few note auctions, and that concludes the day. Listen out for the World Health Organization's top of the hour at 10 a.m. They usually do their daily press conference. Be interesting to see how they label the latest developments. And Donald Trump at 6 p.m. But other than that, I think sellers are going to give it an attempt today. If it works, you got to stay on the downside. If we constantly fail to make new lows, you've got to start looking for the long, even if it's a fade. All right, so we're going to look at this and discuss. I almost hope it holds. but hope is a dangerous word in this business. And the only reason that I hope it holds is because I don't want to see carnage. I don't want to see this market drop 20, 30%, 40, 50%. The average drop of a recession is around 40 to 50%. I don't want to see that, right? That's not good for everybody. I want the thing that is good for everyone, and I'll figure out myself, sort of deal. A really different approach to my teenage years, if you knew me back then. All right. We've gone to the extent that I wanted to go into this update. One thing I will mention, Bitcoin's down 4% to low 9,000s. Bitcoin is really starting to show early on that it's not a risk-off asset. It seems to be more correlated positively with risk, meaning that when equities drop, it takes a leg lower as well, which is interesting. All right. That's what I got for you guys. I want to talk more, but I don't have time. Love you all. Got to go to training room. Take care. Have a great rest of your day. YouTube, rock out. Don't get in too much trouble. Hope you had a great day. So it's supposed to be a lot of snow as well in Canada. 10% is a pullback Forex, and then 20% is a bear market. So we're not in bear market territory yet. All right. Thank you guys. Appreciate you all. Have a fantastic rest of your day. And I appreciate you all. Goodbye. Peace out. Steven, over to you to talk oil. And YouTube, we'll catch you tomorrow. Bye. Love, joy, and happiness.